Hello and welcome to Long Investor. So today Nasdaq finally hit 12.5k by the end of the day. Now I wish I've waited until the end of the day to buy in, like what I did last Friday. And as the title suggested, I went pretty much all in today, especially the crypto sector. So today around 11 o'clock, I bought all of these. As you have known, I already hold any Mao at HUT and also DKNG. And these four stocks I'm adding in as my crypto sector. I will explain why in just a little bit. And then on my ETF account, I did purchase TQQQ again. As I've mentioned last time, if it goes under 40 bucks and if it breaks the previous low, then I will average down on it. So the market opens quite low today and has been falling in the morning. So around 11 o'clock, I see there is the divergence between the RSI and price. So I decided to enter the market, and it did have two little rebound during the day. And as you can see, it drops quite low at the bottom, and right now we're seeing a little divergence again. So I was buying when it was around the 12.6k area instead of 12.5k. And the two big tech earnings today are Google's and Microsoft. And as you know, Google missed their earnings, but then they also announced the share buyback, so it's a mix of good and bad news. So it dropped 3% during the day and it dropped 3% after market. And Microsoft did a little bit better, so it went up 4% after market. So Google and Microsoft, they're sort of in a draw. And as mentioned, the big tech earnings will make the market volatile, so you may see the market go up and down. And tomorrow we have Facebook, and the next day we have Apple and Amazon. And as a reminder, next week is the FOMC meeting, so we will be quite volatile for the weeks to come. And we're just 100 points away from the last year March correction. And as mentioned, if all the big techs miss their earnings, we might see the retest of 12k level. Now, since I've bought all these, I don't really have much cash left. But if it does reach the 12k level, I may consider adding some money to the account to just buy the last dip. So let's talk a little bit on Bitcoin. So regarding the Nasdaq dropping and such, Bitcoin is still heading up between 38k to 40k level. And if you remember last year in July, it was consolidating between the 30k to 33k level. So we are $5,000-$6,000 more than what happened in last year in July. But if you look at the crypto stocks, we're actually trading below the last year June price. And since their earnings, their revenue is based on Bitcoin itself, and currently the sell-off is pretty much driven by the market sentiment. So at this moment, I don't want to say they're under fire, but their PB ratio is quite low at the moment. And as I have explained earlier, most of the miners will still make quite a decent revenue based on the 40k BTC price. Now, while we're on the market sentiment, so the fear and greed index, we're almost at the extreme fear. We're at the almost at the end of the fear level. And if you look at the put and call ratio, so that's how many people buying the put versus how many people are buying the calls. So usually when there are a lot of people buying the puts, it usually signals the bottom of a market. So it might be a little bit confusing to see at the moment, so that I'll put it in a line chart. So on the line chart, you see a little spike point pointing up once a while. So to me, I would say the level of 1.2 would be a good indicator. So right now, let's say if I put the S&P 500 on top, and this is in weekly chart dating back to 2015. So every time when it spike up that is above the 1.2 level, we can see there is a significant bottom on the S&P 500. And even if back then we're at a little bear market, buying in this stage will come to a rebound afterward. So in the short term, it will always have a rebound afterward. And even the recent rebound in here, there's a tiny bit of rebound. And back in February, you know, the Russia-Ukraine conflict escalates. So that's what makes the market tense a little bit more. And currently we're sitting at a spike here again. So as I've mentioned, the market is already pricing in the rate hike, and with the big tech missing the earnings, that will create more fear and much more sell-off in the market. And now it is a very good time to be buying. And other data that I want to show is the inverted yield curve. As you know, the inverted yield curve is an early signal for recession. But as I've mentioned, even if the yield curve goes below zero, it will have some time before the true recession comes. And it is usually followed by a spike of the yield curve afterward. So as you can see, after it reaches zero, the market will continue to go up. And it wasn't until the spike of yield curve which make the market top. So currently we're at 20% and it's usually at 80-90% before a market toppings. So that is why I believe we still have some room to grow before a true market top. And the last sentiment indicator that I want to show is the Nasdaq breadth. So that is the percentage of the stock in the Nasdaq 100 that is trading above the 200 days moving average. So usually when it is below 25%, it is a very good opportunity to buy in. And as you can see during the recession, let's say the COVID crash or the 2018 recession, we have the percentage dropping below 10%. So we have like 7 to 8% in here. And then the data becomes a bit hasty in the early stage, but we can see somewhat in the 2008 market crash, the breadth index is as low as 1 or 2% here. So once in a while, we do get a big correction hitting around the 25% mark. So for example, in here and in those places. And again, if you put the Nasdaq 100 on top, you know, the COVID crash, it's a significant bottom. Here is a market bottom, and in this instant is the bottom right here, and this one is here. So you can see even if we're in a bear market rally, but buying the stock here in the short term, it will still get some sort of a rebound and you can still get some sort of profits from it. And currently we're actually at this double bottom with the breadth going up. So in a way, it just means that the market is being pulled down by a small number of stocks that is holding a huge ratio on the Nasdaq. So for example, the big techs. So this is what I wanted to share on the market sentiment. And now let's take a look at the dollar again. So the dollar has been going up and it has passed the 101 resistance that I was looking at. And the reason why I make the 101 resistance is because of the trend line touching the candle body. Personally, I don't really like to use the wick top as a trend line because to me, I treat this wick as more of a breakout or a short burst or false break, whatever you want to call it, instead of a strong confirmed price. So in here, I line up at the top of the candle body and candle body, so that is why I get the 101. But if I do draw a trend line touching the wick, then currently we still have some room left, so maybe hitting 102.6 or possibly retesting the previous high, which is around 103. And as mentioned, a lot of this are still pricing in the interest rate hike, but despite the rising of the stronger dollar, Alibaba did not drop below yesterday's low. But as mentioned, the market sentiment is quite low, so the falling closing of the gap of 80.3 or the retest of the previous low at 74 is still possible at the moment. And out of everything that I have purchased these 2 weeks, the only thing that's going green is TMF at the moment. As you know, I bought TMF at 15. And my short-term target for it would be around this trend line right here, so it's around $18. Or when TLT hits the previous bottom in here, which is around $128. So by the time it reaches the $17, $18, and if the Nasdaq is still dropping, I might consider selling some TMF to buy into the tech sector. And the last thing that I want to talk about is the junk bond. So once again, this is the COVID crash. And if you're looking at previous market, let's say 2018 and 2016, we are currently testing the 2018 low. And lately, we're seeing the divergence between the price and RSI. And the junk bond is correlated to risk-on stocks, so such as growth stock or penny stocks. So if we put ARK on top, we can see the junk bond bottom also correlate with the ARK bottom back in 2016. And then in here, this bottom right here correspond to the bottom of 2018. And of course, there's the COVID crash. And currently, we're sitting at the 2018 bottom with the divergence showing in junk bond. So I think ARK right now is also at a pretty good buy. And if you're taking at the ARK chart, and if I put a trend line back in 2016 and hitting the COVID bottom, it will make the current price target around 44. And there is also a divergence showing in price and the RSI for ARK. So if you don't mind the volatility of it maybe dropping another 10-15%, I think it's a pretty good time to buy in here. Or you can buy in some now and then save some money to average down when it touches the trend line or when it goes under 45 bucks. But for midterm, let's say 4 to 5 months, it might have a little bit of rebound, but I don't think it will hit back the all-time high anytime soon. And for the rebound, for an aggressive target would be around the 95 to 100. And a more reasonable target would be around $80. So this is all I wanted to share today. If you liked the video, do hit that subscribe button and give me a thumbs up. And I'll see you guys next time.